Hi everyone, how are you doing? My name is Susan Mtana. My YouTube channel is Susan the Trainer KE. Please share, subscribe, like, comment, drop a feedback. Okay, so there is a conversation that I started and never finished, and I want us to pick it up from there. What are the factors to consider when looking for a money market fund to invest in? You know, we are building a culture of saving. So the first thing and the most important thing is to check in terms of is it a fund that is complying with the regulatory environment. So in this case, we have the Capital Markets Authority that regulates the funds, and also we have some fund managers are listed in the Nairobi Securities Exchange. So it's just good to check, is this fund registered? Is it complying with the required laws of the land? And how are they trading in the Nairobi Securities Exchange in case they are listed there? Then the other bit I can tell you to look about the stability of the organization. So let me tie this into the interest, because mostly you find there's an analysis that normally goes round in terms of the list of the money market funds, and then in Kenya there is, and then both in USD and in Kenya shillings, the interest rate they pay, some they pay up to 17% per annum, others they're at 9%, others at 12% per annum, which is good enough, at least it's above the inflation rate. But in this case, somebody will ask, like, Susan, there is this new fund that pays 15 or 16%, maybe it's been in the market for barely 1, 2 or 3 years, and there is one that is stayed for over 20 years and the interest maybe is 9%. So in that case, look at the stability, and you can, if it's a listed one in the Securities Exchange, you can go back and check how has it been performing over the years, or if it's the 3 years you're talking about, how about it? It also drills down into your personal risk appetite. Are you a risk taker? Will you go for the 15-17% for a company that has not stayed in the market for long, or would you go for the one that is paying at 10% or 12% per annum but has been in the industry for decades? Then the other bit is at a personal level, what is the saving goal? Is it long term? Is it short term? Because if it's short term, that's why you're putting the money in the money market fund, then it means short term, the money market fund can help you. But if it's a long term one, I'll be talking about other investment vehicles or saving vehicles that you can check into them before maybe committing into a money market fund. The other thing is the interest. See, we want money, we want some return on investment. So in this case, look at, there is one that will pay you 17%, but maybe they've not told you, like, there'll be the 17% is gross before withholding tax. There is one that will tell you it is 12%, but the 12% per annum is what you get after the taxes. So get to know the interest, and if maybe you love high risk, high return, go for the one that pays well. If maybe you're like, no, I love stability, I'd rather go for a lower rate, but it's stable over time and it's net of withholding tax, then good for you. And the other bit I'll tell you is look at the liquidation process. After how long can you receive the funds? There's some that is like M-Pesa, you can just go click, withdraw your funds in case of an emergency and you get the funds. And there are others that maybe you'll have to wait for 24 hours or maximum 48 hours or even depending on the amount. And that comes with a charge. Check what is their charges in this case, maybe withdrawal fee, annual account maintenance fee. Just get to know what are those charges, if there are any, and get to know like which one is good for me. Because in this journey of personal financial management, we say it is personal. So what works for Susan may not work for you. So see you next time. Bye. Thank you.